House Republicans unveiled their long-awaited plan to overhaul the U.S. tax system on Thursday. The president praised the proposal at the White House.
A lot of good things are happening, but this is the final element, tax cuts and tax reform, and it's an honor to work with my fellow Republicans. I think we're going to actually have some Democrat support. I think it's going to be very, very hard for them not to support it. It will be the biggest tax reduction in the history of our country.
Myles Udland is a markets reporter at Yahoo Finance, and he joins me now. All right, so Myles, the market had already priced in some elements of the GOP tax plan. What kind of reaction are you seeing here in the business world?
Yeah, so in general, business leaders are pretty happy with this, and I think that big corporations are really the winner here. So we had
20% cut.
Permanent cut in the tax rate from 35 to 20. It gets a lot dicier when you go into the personal elements of it. There's still a lot of questions yet to be answered. I saw one quote today. One congressman said the Olympics of lobbying are about to begin now. But I think that big business in general, kind of as has been the case in the Trump era, came out the winner here. I mean, if you look at the stock market, general confidence in that sector, people are pretty much behind the president, and I think today's reaction sort of backed that up.
As you know, there's still a long way to go here, but for the corporate world, when they see that corporate tax rate going from 35 to 20%, what does that mean for them? What could that mean for them?
Yeah, I mean, so it depends on exactly which analyst you talk to in terms of how much money is going to be added to their bottom line, but this is a permanent increase in the amount of profit that most companies are going to be able to collect. Certainly for the shareholder class, that means you're going to see more stock buybacks, more dividends, and it just kind of makes for a rosier picture, I guess, if you're looking from a capital perspective, right? If you are a shareholder or you are in that class, you see a lower tax rate and you say, well, this is great, we're going to have more money going forward, and we could do all kinds of things with it. Preferably reward me as a shareholder, right?
Well, and the president's argument is that they'll bring their business back to the United States. I mean, is that something that is is rooted in reality based on how competitive the world global market is and the cost of doing business?
Yeah, and what they're trying to do in this is that they're trying to set up a provision where right now the tax system incentivizes basically U.S.-based companies to have operations overseas. So Apple's the common example. They have all their foreign profits run through an entity set up in Ireland. They want to make it more attractive that those profits would come through the U.S., but they'd be taxed at a lower rate. So the U.S. government would still get some revenue from Apple sales internationally, but they would be taxed at 10% instead of the 20%, basically as a way to get away from something we were talking about 2-3 years ago, which is this idea of moving your company's headquarters. We saw a number of drug companies do this. They'd set up shop in the Netherlands or in Ireland or in the English Channel just to get lower taxes.
Right. Well, let's talk about Jerome Powell. The president also named him as the new Federal Reserve chair on Thursday, and as Fed governor, he mostly has been in line with the current chair, Janet Yellen. So what does this mean here? How did the markets react?
Yeah, so markets were basically no reaction to this, which I think is a good thing, right? You don't,
seamless transition.
Yeah, you don't want the head of the central bank to be out there really moving markets. As you noted, Powell has been in line with Yellen on policy. I think there's a sense that he might be a little more lenient on financial regulation. Not that he's going to go repeal Dodd-Frank or something like that, but he spent a lot of time in the payments system when he was a Fed governor. And I think that community banks, so these are banks with less than $10 billion in assets, are pretty bullish that they'll have less paperwork to do, or that he won't lean on them the way that perhaps Yellen or Bernanke, folks who were there during the financial crisis, were really just kind of so skittish in the wake of that they wanted every bank to be subject to the same rules as Citi or JP Morgan or Wells Fargo.
Are there any other ways in which the two really differ, you think?
No, I mean, I think, what's interesting about Powell is that he's not an economist by training. So
He's a lawyer.
So a lot of people think that he's going to lean on the Fed's staff a lot more than maybe Yellen did. Yellen and Bernanke, extremely accomplished academic economists before they came to the Fed. And I think that from a market perspective, that's probably good, right? Because he's talking to the people who went to, Stanford and MIT and Chicago and all these places. And so that he's not likely to have a really dogmatic view on policy. And if you look at where the Fed's, kind of staff projections have been, he will likely be sort of within those bounds over the next 18 to 36 months.
All right, we'll continue to watch it. Myles Udland, thanks so much for stopping by, Myles.